The problem with Andrei Jikh's stock investments. Is dividend investing actually good? Thumbnail. Hey, what's going on, guys? Adam here, and welcome to the channel. I just had my 28th birthday yesterday, and I wanted to do a bit of a different video this time around. And with my birthday being right next to Christmas, I want to wish everyone happy holidays. I hope everyone's staying safe and is able to enjoy this special time of the year. In this video, I want to talk about dividend investing and Andrei Jikh's philosophy behind it. Real quick, I want to address the elephant in the room. I am a big fan of Andrei, and his channel has been a huge inspiration to me. I am not ragging on him at any point in this video, but I do want to discuss whether his investing strategy is good or bad for you. We'll start with an overview of dividend investing, then we'll talk about the drawbacks, and at the end, I'll give you the two situations where you should focus on dividend investing. All right, let's get into it. Most of you probably already know what dividends are, but for anyone who doesn't, dividends are payments that are made to the shareholders of a company's stock. For each share you own, you get paid a certain amount. So for example, if you own one share of Apple, you get paid 82 cents each quarter. And buying a share takes about 10 seconds to do on almost every trading platform. So pretty cool, right? You get paid to basically do nothing, which is the whole idea behind passive income. Now, this is a big buzzword on YouTube. Just search for passive income and you'll see an endless amount of videos on the topic. Hell, I'm part of it too. I made a video about my free dividend and portfolio tracking spreadsheet. Now, don't get me wrong, sources of passive income are awesome, but they are not all created equally. Hint, hint. Passive income from dividends might not be all that it's cracked up to be. There are quite a few drawbacks associated with dividend stocks and the passive income that you get from them. First, high dividend stocks usually see overall lower returns than growth and value stocks, even factoring in the dividends with the price growth. Let's take a look at a few high dividend stocks. So let's check ExxonMobil first. It has a dividend yield of 8.33% at the time of this video, which is very, very high. Now you can see that it has overall been trending downwards, which is not great. And that's not even factoring in the, huge correction after the C word hit. So next up, let's take a look at IBM. It has a dividend yield of 5.26%, which is pretty good. And if we scroll down to the 5-year chart, you'll also see that it has been trading pretty sideways over the last 5 years. It's a little bit more spiky, but you can see it go from around $100 up to a max of like 165. All right, now for the last high dividend yield, let's take a look at 3M. Their dividend yield is 3.38%. And then if we take a look at the 5-year price chart, this one's a little bit more up and down. But still, for the most part, if you're holding your money through all this from 5 years ago till now, you would only have made about like 20% on your money, which is not a lot compared to growth stocks. Now, let's take a look at Microsoft, which while it has a dividend, it's actually more of a growth company. So if you take a look here at this 5-year price chart, look at that. You get a 318% gain over the last 5 years. You could have over 4 times your money. Your gains from the high dividend yield stocks would have been a drop in the bucket compared to the gains from investing in growth stocks like Microsoft. Now, I'm not saying don't buy dividend stocks. In fact, Microsoft has a dividend. It's not as high as the others, but it's still pretty solid at 1% yield. Just consider it icing on the cake rather than your full-on target. Second, dividends are not 100% guaranteed. Just take a look at what happened when the C word hit in March. Wells Fargo cut their dividend to a quarter of what it was, and Disney suspended theirs entirely. Companies can struggle and they might have to cut their dividends even under normal economic conditions. Your dividends are dependent on so many factors, a lot of which are out of your control. They can disappear just like that. Third, unlike price growth, receiving dividends is a taxable event. These are either taxed at the capital gains rate, which is usually around 15%, or at your ordinary income tax rate, which is an average of 24% in the United States. That's almost a quarter of your dividends gone just like that. Either way, that's money out of your pocket right now, which could have been used to reinvest and to compound upon itself. However, with price growth, you don't pay any taxes until you sell. And if you're investing it in an HSA or a Roth IRA, you won't pay any taxes at all. Finally, to live off dividends, you kind of need a lot of money invested in them to even make the average salary in the United States. There's plenty of videos to watch on this subject, as I talked about earlier, but if you just want the spark notes, I can give that to you in about 30 seconds. To earn the average salary in the United States, which is around $60,000 in dividends, and let's assume a generous yield of about 5% overall in your entire portfolio, you would need about $1.2 million invested. And if you're making $60,000, there's a good chance that you don't have $1.2 million to put into dividend stocks. I sure as hell couldn't at that salary, and I still can't. So in Andrei's case, he put around $200,000 into dividend stocks. And let's keep that assumption of a 5% yield across his entire portfolio. He was only earning about $10,000 per year. That's not sipping mojitos on the beach kind of money. At least not in the United States. Maybe try Thailand or something. So with all of these drawbacks, why does Andrei invest primarily in dividend stocks? He reached a point in his life where he decided, hey, I'm happy with my wealth. I'm just going to preserve and ride it out. But he did something very smart. Instead of retiring and doing nothing, like sipping mojitos on a beach, he instead started a YouTube channel, which now earns him way more than his traditional job did. Well, alright then, what situations do you want to prioritize dividend stocks over other investments like growth stocks or even real estate? First is when you're in basically the same situation that Andrei was. Dividend investing could keep you financially afloat while you pursue another career that might not earn you an income for a while. But keep in mind that this is much riskier. So this is what Andrei did. He quit his traditional job, invested in dividend stocks, and lived off those while he built out his YouTube channel. And YouTube takes a while to ramp up. I've been making videos for about 7 months, and I've only made about $200, which I'm very grateful for, from referrals. And I'm not monetized at all. Andrei said he wasn't really making money until about a year in doing it full time and having previous filmography experience. And that's still really fast for YouTube, but to go a full year without earning an income would be really, really tough. There's no guarantee of a payoff with YouTube. You have no idea when that's gonna come. So he used dividends to pay the bills in the meantime. So once again, this is pretty risky. So just make sure that it's right for you if you want to go down that route. So second is if you want to preserve your wealth and or want to live off of it. This could be people reaching the traditional retirement age of around 60 to 65, or people doing the FIRE movement, which is financially independent, retire early, where they can retire much earlier than that. Whatever age you do this at this point you have no income from a job. So you want to keep your money in low volatility holdings that can support you financially. So these are really the only two reasons that you would want to go for dividend stocks. Otherwise, you're better off investing in growth and value stocks or even some other kind of investment like real estate. So that's it. Hopefully this gives you a different perspective on dividends and when you actually want to use them. Chances are you're in the same boat as me and want to continue building your wealth. In this case, I would not be focusing on dividends. Let me know what you think about dividends and your reason for going after them or not going after them. I hope you have an awesome rest of your day, and I'll catch you in the next one. Take it easy. Come here, you. Okay, here we go. Good boy. Oh, and here's your cat pick for this week. He would not stop rubbing on the camera stand. Listen to this. Let me see if I can get him purring. All right, see you later, buddy.